All right. So Kwani, what did we do today? Did we not lock in
Study
today
the
or what?
brain. Study the brain.
Study the brain, huh?
Like a G, you know?
Okay. All right. So, can you guys see my screen? Can I like dual screen or what?
No, I can't.
No, you can't. What's up, Marlon? How are you? Wait, so what if I share my... Is this gonna nuke my internet? I don't think it is. Okay. So, you guys can see my screen, right?
Yeah, you're good.
Okay, cool. So the first thing we have to do is scan the flow, obviously. Zach had like a lot of... He was doing a lot of growth short trades, so we're gonna try to keep with that theme with the dollar breaking out. Because if you guys remember, there was that that gold put order or
Yeah,
the gold hedge. What?
I'm pretty sure you're not streaming anymore.
No, he is.
No. I am.
Oh shit. You're right.
Chains is tripping. Is that music too loud on my stream?
Nah, can't hear it.
You can't hear the music?
Oh wait.
Did I see like an anime girl? What was that?
What you mean, did you see an anime girl? Is that music too loud on my stream?
Yeah, can't hear it.
You can't hear it?
I don't think so. Yeah, can't hear it.
You can't hear the music?
Oh wait, yeah, I can hear it. I can hear it.
How did you hear it and then not hear it?
Oh, because I just had to turn up the volume on YouTube to the max.
Oh. Okay. All right. Let's see what came in today and yesterday. So, what do we have? Silver. This was yesterday for 8-2. Oh, this is really interesting. Damn. Oh, wait, no, we're going too far. Hold on. All right. Yeah, I was about to say there's no way. All right, so there's not really that much flow. There's NVDL Hood. You're good on YouTube. Thanks, Imperial. Yeah, I've been mixing it up. So I used to do like the I'm gonna still do the probably bi-weekly shows, or at least switch more towards lessons. But the streaming is gonna be a little bit more active now, so I'm gonna start streaming more.
What's the new thing?
Yeah, because a lot of people wanted to see how I like found trades and stuff and all of that. Derek says hype in the chat for big money moves. Derek, I saw your text to play games, dude. I think David's dead. We'll play this weekend.
So we're not locking it on the weekends.
No, we're not. Pep, all these are monthly, so I'm just not gonna follow these. I mean, this is kind of interesting though.
Wasn't there like news with Boeing or something recently?
This is a hedge. But the only problem is it's a monthly. So we'll go look at this. I was looking at this one earlier. This one I was actually bullish on. So this goes along with the idea of the defensive to value rotation. But the problem is all these industrials look so bearish. Lampo's in the chat. KFC says SMCI calls. We'll look at that in a second. But as far as semiconductors, I haven't really had an idea to touch those. More so a short trade on softwares instead of semis. But as far as this Boeing, the problem is it has an inside day, but look how weak this close is, dude. He got the 182.5. So do you see the strike he got? Do you guys see this right here?
Yeah.
Now, why do you think that would be important, Mr. Kuwani? Let's see how big brain you are.
Oh shoot. Tag.
Don't tell Zach I ditched. Yeah, he was nearing the end of that conversation, let me tell you. No, Kuwani. So if he thought this was actually going to break down to the downside, he would not have bought the 182.5 because that is the bottom. Does that make sense?
Wait, repeat that?
So, okay. So here's the only problem I have with this order. As soon as he placed it, as soon as he placed this order at 188, oh no, wait, actually, this is good. So check this out. He placed this at 188.46 on this day. So he placed this right at the top. He was rewarded instantly. Okay? But he got the 182.5 strike, which means if he actually thought this was going to break out, he would not have built the bottom here. Do you see that? He would have gotten closer to the money up here. He would have gotten like the 188 puts, something down here, or he would have not put the strike on support. So now the incentive of the market makers is to, no, I don't actually want to push it down below this, because he would be in the money and they've already rewarded him now. So I think he's actually built the bottom, especially since this meets the criteria of a hedge. The only thing I don't like is it's 719, which monthly expirations typically are a little tough to trade. But given that we're only 2 weeks out from it, roughly, this makes sense. So 1,900 contracts, 150 apiece. This is a hedge trade. So in my mind, this would be a bullish trade on BA. But again, this one's gonna be so tough. Like, let's see because it looks so bearish. That's my problem with all these industrials. Is like, if you look at XLI, this thing looks like ass. But maybe they'll have a big U-turn. Who knows? Maybe all it takes is Fed talking this week. All right, so someone asked about SMCI. So with SMCI calls, you're kind of at the pivot right now. Now, one thing you have to be careful of is this right here. I'll show you. We'll talk about a few different things. Okay. So what I'm gonna do, and this is what you can do in the future to see which ones you should probably long. Okay. With how the markets are working right now. By the way, is the music too loud? Type in chat if it's too loud. I'll turn it down. But as far as how you should do this in the future, since we've pumped, what you want to do is you want to take. There's two different ways to do this, at least in my head. If you want to know which stocks to long and short, say, hey, which ones are going to be the best long to the upside if the markets continue higher, or which ones are going to be the best short trades if the markets start to reverse. If you want to know which one is going to be the best stocks, what you have to do is find the relative strength. You have to compare them, and you have to do it from an intelligent spot. So I know this sounds confusing, but let me explain. So because this structure started around the 18th or 20th, let's call it the 20th, we could do two different comparisons. The first one I'll do is from June 20th to now, since that was the previous top. So what we'll do is we'll do from June 20th to now. And I'll show you what I mean in a second. This will all make sense, I promise. 26. I'm listening to both. So your ears are absolutely finished. Okay, so what we're going to do here is we're comparing the relative strength of this. Now, this right here is from, let me move this over a little for you guys. This right here is from June 20th to July 9th. It is comparing the performance of all the sectors and industries. Now, industries are smaller than sectors. Sectors are more broad. Okay. So this right here shows all of those. Now, obviously, the top performer is Tesla, which is in XLY, KRE, regionals. You got a bunch of other stuff, technology, things like this. So these are going to be the better shorts moving forward if the market does reverse. Okay. At least for that big juicy move to start with. The leaders always get hit the hardest. But if you wanted a long-term short, you would go for something like the laggers down here. But I think all these have already moved. Now, looking at this, I don't think this is a fair assessment of what's going on in the markets. So let's take the relative strength from July 2nd to now, because that's when the dynamics of the market changed. We always want to compare relative strength of the market sectors and industries when the dynamics of the market change. So what we're going to do now is we're going to do from July 2nd. So we're going to take this and we're going to change it to July 2nd. And this will give us a different kind of reading. Now, what you can see here is that GDX, gold miners, you have the solars, clean energy, and semiconductors is up here. Now, semiconductors is the best continuation trade, technically speaking, because it is at the top of this list. When you want a continuation in the market, you continue to long the leaders. Okay, do you understand that? Type in chat if you understand that, just so I know you understand that. So if you want a market rule, so here's the rule. If you want a continuation in the market, let me write this down for you. If you want a continuation in the market, you long the leaders, okay? Now, that's not a reversal. That's a continuation. Now, what happens if you want a reversal? Reversal in trend. If you want a reversal in the market, at least to the downside, you short the leaders, okay? Now, this is to the downside. We're going to be very clear. This is going to be if market's going up. All right. If market's going up, continuation in the market, long the leaders. And then if you want a reversal in trend, you short the leaders. Okay. Now, if market's going down already, and you want a continuation in that, you short the laggers. Okay. And if you want a reversal, you buy the laggers, because those will get the quickest bounce. Okay, so it sounds a little weird, but you're essentially, at least for that initial move, all right, initial move, we're not talking about any sort of thing. And so if you want a continuation in the markets to the downside, you short the laggers if the market's already going down. So let me give you an example. Okay, I'm going to draw this out so you absolutely cannot mess this up. All right, so right here we have a market and it's going up, and let's say it already bottoms and it's right here. If it already bottoms and it's already starting to be strong, you long the leaders, excuse me. So this right here, you would long the leaders because it's already bottomed. Okay, now let's say the market's pulling back and it has not bottomed yet. It's right here. Well, if you think that reversal is going to come, you long the laggers. You do not long the leaders in this scenario, because those are the most beaten down and they'll get the quickest bounce. They'll get the quickest rotation into them out of everything initially. And then once the laggers get that bounce, they get the juiciest bounce, several percent. They start to outperform the market. Then once that initial bottom happens, then you want to get in and long the leaders because of the previous trend, because then those will get the longest continuation. Okay, so if the market's going down and you want a continuation down, you short the laggers. Okay, but what happens if you want a reversal? Well, you got to buy the laggers because those get the initial quickest bounce. And then once those laggers in a macro market bottom get a boost and they get that rotation, they'll start to taper off very quickly. And then you go for the continuation in the leaders, because now you have a new trend. So now we're longing the continuation in the leaders because they will go a lot longer. All right, so anyway, there's your little mini thing related to SMCI. Now, specifically with SMCI, this one looks all right. I'm going to be honest, semiconductors are pretty ass to trade right now. There's no conviction in them. I think, especially with the expensive contracts, you're not really going to see anything. If you want to day trade these, honestly, I think probably NVIDIA's or AVGO's your best bet. I don't think SMCI is going to do anything super crazy. I mean, again, if you get a gap up tomorrow and see a push, you could do it, but don't swing anything. I wouldn't swing anything past a week, max 3 days. And yeah, that's my thoughts. PLTR, but again, with these semiconductors, you have to absolutely wait for gaps, and even then it makes it tricky. But you just play the gaps and you let it run, because oftentimes these semiconductors have like 6-7% days. As far as PLTR, and then we're gonna get back into some other stuff. Look, man, PLTR personally, you have to know as a trader when to look at certain things and when not to. PLTR is a stock that, in my opinion, has already had its opportunity drained from it. So if you're looking at a stock and you're saying, hey, is there an opportunity in it? Just because you're hearing it on the news, just because your favorite influencer told you about it, and just because you're hearing the ticker all around, does not mean there's actually opportunity in it. If you look at this, you have already moved in PLTR in the last, I don't know, 3 or 4 days, whatever. Let's do price range. So since the beginning of the month, you have moved around 20% already. Now, if you get in long, I'm an options trader. You're chasing price. You're already above a high of the previous high. There's no more opportunity for me. It's likely to contract. You're likely to see more contraction because after expansion comes contraction. So personally with that, man, PLTR, I'm not going to touch that. I wouldn't trade it. That's just me though. But how you guys find now, and I'll tell you a secret with this. This is what we're going to do tonight. How you should find trades is off the price charts first. So what we're doing right now is we're looking at several different things tonight, but one of them is going to be the option flow. If you want to find trades that have edge, look outside the price charts first, because if you're looking at the price charts first, you're going to get clapped because price action, you need something to validate why that price action makes sense and why you should trade it, because otherwise price action is just price action. Without validation of it, it's meaningless. So anyway, there always has to be a bigger underlying thing to that. Now, Mr. Kuwani, did you have any flow trades you found or no?
Nope.
No? Okay. Well, we'll keep looking. So that BA one, I think that's a bullish BA trade. This PEP one is interesting, but I think they have earnings if I'm not wrong. Yeah, they do. So that is a no bueno. XOP. We'll look at that in a second, Mr. Witchell. Because there's some flow on this one. So we'll go look at that one. So this is XOP. Or go dump this on this chart here. We'll come back to that one. So there's XOP, UNH. This one's actually crazy. Let's go see this one. Oh, damn. They have earnings though, don't they? Damn, but he got the 12th. That one's interesting. We'll look at that one. So UNH, that looks like an earnings trade. Let's see. CL, or that's CI, my bad. This is it. What does that say, Kuwani?
Sigma.
No, yeah, it's this. It's the Signa group. No, that's a no-go.
I think
On
it might
that
be
one.
part of that.
Oh, you think so, huh?
Yeah, yeah.
Is that where all the TikTok kids get hired?
Okay, you're a TikTok kid, like literally. Like,
All right. Sorry, I need to catch up on chat, guys. So ADMA, it sounds like a penny stock. I don't really do penny stocks, man. I'm an options trader, but I'll tell you this, man. When things go straight up and you feel like you want to buy there, don't. Okay. I know there's a saying, if you like it at $11, you'll love it at $2. All right. The way I trade, I like to find trades that I have edge in, not just trades that are my favorite tickers or something I heard in the news. So I trade off market mechanics, and there's mechanical processes in the market I look for to try to find edge. Example, option flow, example, rotations, example, some sort of bigger idea such as seasonal, something like that, which of course, if you guys watch more and more, you'll understand. But that's that. So then why are you trading? Sorry, I'm reading this. So why are you trading options if you're purely betting on the stock? You're betting ripped off since you have no idea what fair value is when you're getting filled at. The mixed songs, are you still in here? I'll answer your question if you are. If you're still in here, I will answer your question. QQQ, SPY, thoughts tomorrow. So personally tomorrow, man, it's gonna be, we'll talk about that in a second, but I'll just give you a brief summary right now. My thesis for the week has been that, we would see a significant slowdown with how the market rotations have been cooking up. Here you go. Okay. So what's happening right now in the markets? Yep, you are. Okay, I'll answer your question after this. What's been happening in the markets right now is a defensive to value rotation. And what that means is firms are rotating. Well, the markets are rotating out of growth stocks, XLY, XLK, XLC, and they're rotating into defensive stocks and value stocks. This is a classic sign of a drop coming. Now, this is on the 60 minutes, so typically this takes anywhere from 3 to 4 days to play out. But this has been like this for at least 1 or 2 days now. So whenever you see a defensive rotation, this means that there's likely to be a slowdown or drop coming. So with us already getting a slowdown, it's logical to assume that there's likely to be a drop, breakout in the dollar, and there's been several signs of seeing that. Holding VIX as well. All these signs are saying that we should likely see some sort of drop, maybe a 2% day sometime within the next week or so. Now, with that being said, how do we trade that? We're going to try to time it with shorting the things that make the most sense and also longing industrials, healthcare, these names that could benefit most from this rotation. Now, things have gotten really sloppy towards the end of this, but I think that this is still a valid trade. Banks, especially energy, is a tough one, but I think industrials also hold value. So we'll be talking about that here in a second. Chop or drop. Either one, with so much momentum, it could end up just being a chop and contraction. But again, betting on the drop within a contraction can't hurt, because the worst that happens is it contracts and you don't make as much, but the short trade is better in a contraction. Now, specifically with that, we'll talk about the market sentiment here in a minute. But I do want to random path with your eyes, no spine or volume surface. What do you have a clue how to steep the skews? Okay, so mixed songs. I'm just going to address the first thing you said. I can't remember what you're responding to. You said, then why are you trading the options if you're purely betting on the stock? You're getting ripped off since you have no idea what fair value is. So fair value with options, I mean, unless you're a market maker, I guess, if you're trying to understand, well, wait a minute, I'm paying too much. Understand that premium, we don't want to pay a stock that has super high IV. We're not trying to play stocks that are $2,000. Example, Nvidia right before earnings, right? We're not trying to do that. But what we're trying to do is capture a bigger move. As an options trader, I prefer to enter in contractions. I prefer to enter in slowdowns when IV is lower. And that way that I'm not trying to fight for every penny on my contracts, but what I'm doing is I'm betting on expansion, and that does pretty well. Now, obviously, with the VIX being lower, especially, options are not market-wide that expensive. So with those levels normalized, what I can say is I don't specifically, I guess I forget what you're responding to, but hopefully that answers that. Are you suggesting that does not matter? What doesn't matter? Also, I don't feel so bad about staying away from Tesla and Nvidia. Yeah, and absolutely, guys. If you look at a chart like Tesla, for example, and you look at this, is there a trade in here? Sure, you could find a trade. But when you talk about risk to reward, and if you guys remember, this was my trade down here. I caught this move right here, so I did not catch this ginormous because I brought the 28th expiration and the 12th expiration, or yeah. So we had a trade down here. This was July, into July, or late June, excuse me. So we had this trade, but I did not capture this. So when you talk about, okay, well, is there opportunity for me right now? No, the options, they're going to be crazy on this, and it's just not worth it. But if you're a little more clear, mixed songs, if vol crushes, even if delta goes your way. So what's your, I guess I'm confused what you're trying to say, because what are you arguing, I guess is the best thing to do. Do you think money is coming out of the bonds and off the sidelines? Would that explain the huge run-ups in the Mag 7s? So over the last, yeah, I mean, especially over the last year, no one wants bonds. That's just how it is. I mean, you look at TLT, that thing is getting absolutely obliterated. But no one wants bonds right now. This has been apparent since the start of the year and even the year before. People would just prefer assets, especially firms. Why get into bonds when the markets are you can get 8%, 9, 12% return for virtually the same thing. Now, of course, bond traders will get mad at me, but we tried to take a leap trade back in early May on bonds, and I closed this for break even actually to like last week. So we tried to hit a bounce in bonds, but it just wasn't it. Anyway, we'll get back to this, but who hurt you mixed songs? I was short Delta today on something that stock went up. I still made money. That was a negligent. Explain what happened. Hint, it's about volatility. So, mixed songs. It sounds like you're talking a lot about Greeks, but not a lot about the market. If you trade purely off option contracts and you don't look at price action, or you don't look at, I guess, the mechanics of the market, understand that options and how they're priced, it's a result of a move. So if you expect a future move, it's not always going to matter what the current price of the option is. Okay, so if you have, for example, smaller expected ranges, options are going to be very cheap. And then when the market expands, you make a lot of money regardless. It doesn't matter if that's a fair value of the option or not. Typically how I buy is just at the money with that. But anyway, so we'll get back to finding these trades. This is interesting. Check this out, guys. So this is, here, we'll do this. What is 0.18 times 5,900? So why are you trading options? It's 1,062. So why am I trading options? Well, if I expect a directional move, couldn't I leverage my gains more if I did? And I was able, if I was good at timing a market, which I am, and I agree with you, options are the most powerful asset class in the world. Why do you think I'm looking at options right now? I'm looking at the options market right now, my man. And Greeks are absolutely incredibly important for trading, but they're not something you have to stare at all day. If an options contract is decent spreads, within expectations, not too bad a theta decay, you can get paid for the move, you know, it's not something that has to double to make 100%, then there you go. It's good enough, man. XLU. Ooh. Okay. So this one's interesting. And I apologize. I think Witchell mentioned about XOP later. We'll have to look at that. Let's stay focused for a few minutes here. So we have XLU here. So check this out. Kuwani, let's see what you know here.
Oh crap.
Let's see what you know, big boy. What you see?
Wait, don't put me on the spot. You know,
hey Raider, sorry bro, tuned in late. What's up, CDP? How are you, man? So then trade futures. So mixed song. They're both like, I don't know what you're trying to say, man. Just as respectful as possible. You're pulling out your hair. It's crazy. You have mixed songs balding. Hey, there's some hair regeneration for that. All right, what do you see, Mr. Kwani? And by the way, you guys can all type questions in the chat too. We're good.
Yeah, guess with me, guys. I mean, he got rewarded pretty instantly, right? So that's a green flag for us, I believe, right?
No, he didn't. He bought right here.
Oh,
yes, sir.
Damn, Chains, help me out, man. Unmute yourself.
Chains, let's go, man. Get the mic out.
Come on.
Oh my god.
So mixed songs. If you have specific questions, this is my last thing I'll say to you, man. If you have specific questions and you politely ask them, I will answer them. But me trying to explain why I trade options to someone who's not going to listen is a waste of my time, if you understand it. And that's just to be respectful to the other people in here. All right, go ahead, Chains.
All right. So basically, this guy on the flow is betting. Is this a hedge?
I don't think so. No.
Why not?
I mean,
Isn't it like
it's 30 cents at a 3,400 contracts. But since remember, if the premium is under $1, you have to divide that by. So this actually comes out to around 1,000 contracts. Now that's on the edge of being a hedge. So typically over 1,300 is a hedge, but it could be. But since he bought it right here, we'll have to see if it gaps up tomorrow. You play the long. But in this case, this could be a directional
the place
trade.
he bought is interesting too.
Yeah, so he waited for this to pull back and then he bought it. Or unless if he bought it right here, but I don't know the timestamp. But either way, he bought either here or here. So either one, this is probably a directional trade, given that it's only 100K. But the question is, XLU, if it's a defensive and we do expect that rotation, could this be? So this could be either or, and what we want to see here is a gap up. If we see a gap up against him, you just play the long in the breakout in XLU. Learn math and computer science. Nah, you don't really need that for trading. Yeah. So Dominic, the XLU is very interesting. So here's the problem with where we're at right now, is if we expect a defensive and value rotation, then once that finishes is typically actually when all the market drops. So you do see a drop in defensives, and you do see a drop especially in growth. So this is going to be one that's going to be interesting. But what I like about this, guys, and if you are an options trader for the future, when you look at flow, you guys know that there's certain criteria we look for. I'm not going to get into that too much tonight. We'll do a lesson in a minute, but after we find some trades. But the XLU right here, he got this for 712, which is very interesting because it's very short expiration, and the question is too short. But if it's 719, it would change the entire idea, because a 719 trade is less aggressive and therefore would not cause a reaction from the market makers to balance this in any way. All right. So that one's interesting. So Kuwani, can you save this one? Just like screenshot it or something.
I got you.
And then we had this XOP order as well. So this one's actually interesting. Sorry, I need to catch up on chat, guys. I know you're asking questions. Maybe D Duke. Yeah. I think XOU also. I don't think the spreads are too bad. If they are, yeah, look at D or Duke. I think D has better spreads. Mixed songs, bro. Raider, would you say day? I don't know what you mean by that, Wolf. Raider, would you say day trading is more difficult than swinging? Yes. But again, that time frame is relative as well. So scalping is incredibly hard. You guys have to understand, the smaller time frame you get, the more precise you have to be in your timing, which is incredibly difficult. Bro, these new generation traders have this concept: there's their way or the highway. Or the highway. XBS, are you talking about me or someone else? Because I'd be happy to explain some of the things I'm doing. Trading is difficult for any new trader. Raider is showing everyone edge. You must have an edge. My edge is...
Edge.
Kuwani, we're not going to go the sus route with this, are we?
I didn't say anything sus.
Okay. Are fundamentals cope? Do we really care what Powell is saying? Whether... So, this is a great question, Ben. Market mechanics, there's always... what people have to understand is that fundamentals in the long term, they dominate over market mechanics. But what I'll say with this, in any reasonable time frame, that market mechanics is going to dominate fundamentals. And I'll tell you why. There's a reason why GameStop is valued more than actual real businesses right now. And that is because there's mechanics to markets. And if you understand them, that is where a lot of opportunity comes in shorter time frames. Now, I say that it's very wishy-washy relative language, but that's the general concept, is that does what Powell say matter to the markets? Absolutely. But you always have to remember that markets are always pricing in ahead of time. They're always moving in. There is a validation behind the saying, buy the rumor, sell the news. But what I will say from a less general sense is that market mechanics will always dominate over fundamentals in the short term. Fundamentals are just a validation of something that's going on, if that makes sense. But again, GameStop, all these other stocks are very obvious examples of why market mechanics is better than more worthy of your time if you're a trader to understand than fundamentals. 719, this one's interesting. So if you check this one out, this one is a hedge, and look where he bought it. Do you guys see this? Kuwani, what happened here? Break it down for me.
He bought at the riskiest place. Boom.
Yep. So, but what's interesting is he also bought it before the bottom, right? And he bought 144 puts. So if he actually thought this was going to break down, he would have bought underneath this, right?
Right.
So Witchell, if you're still in here, this is actually a bullish XOP trade for next week. Now, for you guys out there, The I'll show you this right here. This is our seasonal tool on the Raider Report. But the Season AX charges like damn near $120 a month for this. But we included it. If you look at XOP, typically energy doesn't get a pop till later July. So let me just look at specifically XLE. So we'll compare these two. So XLE, you can see in late July, around July 17th is when you actually get a pop in energy. So that's next week. And if you want to be in before that date, obviously. But if he's betting on that, perhaps we get a new low and we bet against him. So this one's just to be patient on. But it is favoring that in just about a week, you'll see a bigger pop, bigger reversal in energy. So check that out. What do you mean by that? GME is valued more by real businesses. Microsoft, not a real business? What are you saying, bro? I'm saying that GameStop is valued more than some actual businesses. And if you were a fundamental trader, you would have lost a lot of money on that or you wouldn't have made money on that because you wouldn't, obviously with GameStop squeezing, GameStop is not a real business per se. It's a trash business. It's like Radio Shack. It's just, selling used games, video games is not going to have great fundamentals, but yet it's evaluated more than companies with great fundamentals, if that makes sense. That's what I was trying to say. But anyway, mixed songs, bro. Respectfully, man, just calm down. No, I'm talking about the other guy. I like your strategy. Help me discover an option wall strategy. Awesome, man. Yeah, we talk a lot about that, and we'll continue to talk about that. But mixed songs, bro. Listen, man. With all the love in my heart, I'm a Christian. I believe in God. There is a guy upstairs. If you want to learn and you want to help, and this goes to anyone in chat who doubts me, who comes in this chat, I will not be frustrated with you, and I will actually help you if you are down to learn. But if you continue to have some sort of resentment or something like that towards someone, you can't benefit from that. And I can promise you, at my age of 20 years old, my mentors, I've been taught by professional traders. I know a lot, okay? And I'm willing to help you if you're down. But other than that, I love you, bro. Dominic, you sound like you watch soccer. Have you been watching soccer, man? But we'll finish up viewing this flow. So Kwani, save that one as well. XOP, go screenshot that one as well. Okay.
All right.
Mr. Helper, man.
Slave.
Oh no, check this out. I didn't see this. Did you see this? Do you see this? Oh man, Boeing. Screenshot this Boeing too. So this is going back to this idea. I didn't see there was a call with it. So what this idea is saying, what do you think it is saying, Kwani?
Hold up, I'm screenshotting.
And
Wait.
Mixed songs. If you truly doubt my performance or you doubt how I view the markets, all my trades are documented, archived, and displayed on the Raider Report. Okay, that's all I'm going to say, man. You can go to my YouTube videos. They're all free. If you don't want to pay for the Raider Report, you can go to my YouTube videos and you can look at all my trades. And you will find that majority of my trades, majority of my ideas are right. So just go watch those. I encourage you to do so. But this one, what does this say, Kwani? Or Chains? You guys can call the shots while I eat my piece of pizza. A bit. Waiting for the semis. Dude, the Argentina game is insane. I was trying to watch that, but I wanted to stream for you guys, so.
All right, Chains, you got this.
No, I don't got this.
Now you got it, man.
Let me gatekeep these strategies. XB, bro. We need this guy. He needs to be studied.
Yeah, we need him stat.
Kuwani, is this your second account?
Yeah, it's my alt.
Okay, so
I mean,
what's going on here, Chains? What is the trade idea on this trade right here? What's going on?
I already put this on the Chains report, so
Oh, the Chains report. Okay, what did he say here?
You guys are gonna have to subscribe to see that.
So I have to pay you to tell me my own trade, okay? So go ahead, Chains, give me a demo.
Essentially.
Wait,
Okay.
would this be like a strangle or?
Okay, so we're getting there. I mean, we don't know it's the same trader because they placed it a day apart, so it's probably not. But the idea is this. If this is a hedge, right? This is a hedge, right?
Right.
Okay.
Right.
If this is a hedge, someone bought a call for one strike out, That's not a hedge. So you have two bullish directional trades here. Does that make sense?
Wait, repeat that.
So these are two bullish directional trades. You have a hedge, so this is going to make the market makers buy this shit up. Okay? So the mechanical response, and for everyone in chat, and you're wondering why I'm looking at option flow orders. There's 3 types of option flow orders we look for because there are mechanical responses to the market. Options create mechanical responses in equity. In 2024, the options market is the most powerful market in the world, and I'll tell you why. In 2024, although options are a derivative of equities, they are actually moving the underlying. Options move equities because market makers balance equities around options now. So there's certain criteria. It goes real deep. It gets real complex. But for this idea right here, this is a hedge order. It meets the criteria for a hedge. Now, what is a hedge? A hedge means that it's going to force a contra reaction in the markets based off how we place this. If you guys want an example, because I know there's going to be some debacle-y in chat, because there seems to be a lot of yapping in chat. There is this trade right here that I'll show you. Oh, my bad. We'll show you this right here. Okay. 1 second.
Raider, that call is that not a little too far out for that size?
Not paired with the hedge. Okay. So right here, and this is shout out to my guy Mix Songs. This is my BAC trade, okay? And this is the same similar idea. These BAC puts were a hedge order for 7.12 and 7.5. This is a bullish trade in the markets. You can go pull up a chart for BAC right now, and you will see that this, again, this is why options are so powerful, is they help you time markets, right? Timing is the hardest part, not direction. Direction is super easy. So this, it created a bullish reaction in the market. Okay, Raider, that's, you got lucky, Raider. You got real lucky. Okay, another hedge trade, CVS. He got 7.5. He was too aggressive. This meets the criteria for hedge. You go look at a chart for CVS. This is a hedge trade, so we bet against the calls. CVS, market makers balances it against him. There was a negative reaction. Okay, so this is the same trade idea on Boeing, and it does have a track record, probably 80% win rate at least. With that, so BA, because I saw 2 of these orders give a story to me. This tells a story. It tells a story of, well, if we do go down, since this is really weak, it's going to be buy the dip. And given that this is a longer dated call, you would also get this on discount, right, Chains? Does that make sense?
Yeah.
So if this does continue to go down, it's still a bullish trade idea because the hedge would now be in the money, which gives us an imbalance on the options chain, which gives an incentive to the market makers to correct it, but also that we have a directional trade in that we can follow along at discount. Okay. So this is going to be a 7.26 trade for sure. So keep Boeing on watch. So we can just make a chart real quick, actually. So we want this thing to liquidate. So let's see this. So we go right here. Chains got this. BA looks like it could go up or down, not sideways. Wolf, you sound like every stock guru. Well, not every. Most stock gurus, when they get asked opinion on a stock and they go, it could go up, it could go down. Great opinion. Wow. Yeah.
I think I'm liquidating.
Yeah. Okay. So. Okay. So we want this to be the liquidation level. We want this to go below this, and then this is going to be a buy the dip trade probably. Let's see here. If this is the original parallel, this is the midline, so it would probably be right there. So I'd say no lower than this. So we do want it to liquidate. This would cause an imbalance on the options chain, and then below this would cause a reaction. Does that make sense, everyone? So that's a trade. That's a trade idea on that. Yeah, you're cooking. I actually covered this in the Rick report. So mods, can we ban Rick? Yo, um, I would say that junk price action midday is due to market makers countering option flow or just algo HFT, high frequency trading, or algo hedge fund trading. Computers doing their thing, really just like trading 10 to 1. You know, you're not wrong. A lot of lunch hours, especially during Mondays, are trash. How do you know that this is a hedge or directional trade? Aha! Mode! Welcome to the chat, buddy. I recognize your name. So there's a few different criteria, some of which I'm reluctant to share a little bit, because it is the secret sauce. But I will say the number of contracts, the premium, the location, and the ticker, and the expiration all play a date. Literally everything about the order. Okay? But because he got such an aggressive trade with too many contracts, with too aggressive location, that's that. Just wondering, have you studied physics? Do you know what the path of the stock is random? Not really. No, it's not. Guys, please be respectful in chat. Mods, ban anyone who drops a laughing emoji. So, make songs. The path of a stock is not random. Hence why Warren Buffett is a billionaire. Hence why there are driving factors to a stock. For example, mixed songs. Let's say you and I started a really big tech company, okay? And we solved the world's problem. We created this crazy efficient AI system. And we sold it to all these companies, and everyone starts saying they like our product. We have a great business model. We're growing. Does that make would you say the trajectory of our company is random? Not really. We have a decent trajectory, right? Screw the stock. We're not talking about stocks here. Or let's say I throw a baseball, okay? And I put a lot of force behind the baseball. If the baseball is going straight like this, it is very predictable because I threw it with a predictable amount of force in a direction. So to that motion, you can predict, if you know the inputs to a stock direction, or you know how the markets work, if you know how to throw a baseball, you can throw a baseball consistently over and over again. If a baseball was random in how you threw it, pitchers would not be able to pitch how they do. So I would counter your argument and say, absolutely not. Stock, I mean, if you get down to a second time frame, perhaps, like the smaller time frame you go on a stock market, the more random it gets. That's just how it gets. But no, certainly not on that. But did something like this happen with Microsoft the last 5 minutes of the day? There was some, I don't think there was any Microsoft flow, but we'll check out some of that. So moving on from that. Anyway, so we have XLU, BA, and XOP bottom. Okay, now I want to look at this UNH. Now this is a little concerning in my eyes. So you're a fundamental activist investor. Secret sauce is lamin. If it's only random, if you don't know why it's doing what's doing. I agree with that statement. Will you pin or save this in your channel so I can watch later? I think it should be saved under my live, Mr. El Sonido. Wait, I speak Spanish. 1 second. El sonido que necesitas. I did my best there. Raiders looking for inputs. Bro, just ban this guy. All right. All right, how do I mute? Sorry, this is my first time live streaming. Wait, guys, should I make a moderator? No, I'm trolling.
Definitely, like, Abstract deserves it.
All right, I'm gonna put him on 30 minutes. I'm gonna put him on a 10-minute timeout just to think about it. I'm gonna be his dad for a second. Raider is teaching physics. I am absolutely teaching physics. Thoughts on C? Had a nice move today. Banks are bullish. I'll show you why here in a minute. But this UNH, I need to figure this one out. So what do we think? What do we think here? This is a directional trade. It's out of the money and it's quite aggressive. It's 150K. Now he bought this on the 8th. Was there an immediate reaction against him? There was. So do you guys see this? Okay, let me explain this to you guys. Okay. I was long UNH yesterday. Oh God, here we go. Well, you know what though? This was actually pretty good. So let me explain what happened here. Okay. And also everyone who's in chat right now, drop a like on the stream. Okay. I only see 1 thumbs up. I need to see I need to see at least 2 thumbs up. All right. So drop a like. I need 2 thumbs up. That's it. All right. Go drop a like on the stream. Anyway, so with UNH right now, you have out of the money puts. This is aggressive. 150K, 712. Okay. Now, why is this aggressive? Because this is before earnings. So this isn't an earnings trade because he didn't grab past the earnings expiration. So this is definitely a directional trade. Now, what do you notice? As soon as he bought this, check this out. And this will go back to why option flow is so important. He bought this right at 386.23. 93. Okay. So do you guys see how he single-handedly created the support for this stock? Do you see this? Derivatives create influence on the equity market. Because he placed this trade and it discounted against him, what can we infer? Well, it's not a hedge trade. It does not meet the criteria for a hedge trade. So guess what we're going to do? We have to understand, well, I'm yapping right now, but what does this mean? It means that because the market makers pushed against him instantly, he is now discounted. Chains, could you look up what his contracts are at right now?
Yeah.
Okay. I'm just afraid to pull out my phone because your girl was texting me. I'm kidding. Your Spanish excellent raider. See? All right. Hymns, please, with the moaning emoji. Wait. Randy, we need to back this statement up. So we're talking about hymns, which is like what dudes send Viagra through, and it looks juicy. I don't.
How do you know that though?
Randy, we need to back this. We need to back this up, pal. Okay, so can you look at hymns, please? Looks juicy. All right, so we're just gonna go look at hymns, but that was outrageous. Hymns, let's go take a look at this. Hymns looks good, but I don't know how their contracts are. Let me go look real quick. I haven't traded hymns in a minute. I'm not gonna lie. Guys, do you want to start banter? Yes or no? Oh, did you guys know the weekend of July 4th, like last week? I forgot the markets closed at 1 a.m. the day before, so I got exercise for like $80,000 in NVIDIA puts. Outrageous. I sold them the next day though, but it's outrageous. Hymns. Okay. Let's go look at these contracts. I don't like, can you even get paid with these? Let's see. I'm gonna pass on hymns. I'll tell you why. I mean, their contracts aren't that bad. But at the monies you have to go slightly in the money, and you have 10-cent spreads on 60-cent contracts. It's just not worth it to me. I will say this, though. One trade I am looking at is Alta, guys. This is going to be a longer-term one, maybe September. But look at this one. This one's really good. Alta is looking juicy. Sorry, I didn't throw the price chart on there. I guess I should have done that. But that is called a discount trade. If you guys looked at that UNH trade. So UNH, although it doesn't fit the narrative of being bullish industrials and healthcare, I believe that actually this one could get a decent drop or a liquidation at least. So if we are to say that industrials and stuff are bullish later on, that's that. Can we check the seasonalities for UNH to confirm? Yeah, sure thing. And if you guys remember, if you guys go to the Raider Report, if you guys are a pro member, you can get the seasonality tool. It's included with it. So all you'd have to do, and I'm serious when I say this, I pay for Season AX. I'll show you this, guys. I paid for Season AX. This is like $120 a month, but it's like, it's the same shit. And it's just literally included in the Raider Report. So if we look at what was the seasonality for... Sorry, I think I lost it in chat. Can we check seasonality for UNH? Yeah, you're good. I got it. So we won't look at the last 40 years. We'll only look at the last 15 because, again, whenever you guys check seasonals, do not include 2008. 2008 is when huge policy changes as well as mechanical changes came to the market. So try to stick to seasonalities or seasonals past 2008 and now, okay? So, I mean, it does have a bullish run up typically, but... I mean, these seasonals aren't that amazing. I mean, this is not much conviction behind the seasonals. But yeah, I mean, this is more bullish than bearish. So we'll have to see with that. Again, it doesn't quite fit the narrative, but how you would kind of trade this is any sort of gap down back towards the low. You could try to trade the flush down. But that's that. So let me see what XBT said. He said, I don't fully understand your strategy, but from what I can see, the market makers like to target these larger options and like to liquidate them in order to preserve liquidity. Okay, so XBS. So are you familiar with options? How familiar are you with options? Just so I can get a baseline where you are. And then I can help spark something. Hims, did it get past DEI requirement? Yeah, I probably shouldn't answer that, Wolf. Or my streaming career would be over.
Wait, what's that?
Diversity and inclusion. Ethics and inclusion.
Ah. You know, I heard the Rick report has a better seasonal indicator.
So, where's my mods in the chat? Please ban Rick. But yeah, I like this BA1. So this is going to be a bullish idea. And I think it's going to be a good one off of flush down. So if we get any sort of flush down on Boeing, I'm going to be targeting around that 179 to grab 726. But Mr. XB, yeah, let me know your baseline on where you're at for that. Do you mainly trade large caps or any size? So let me explain something. All right, so everyone in here, type yes in chat if you are absolutely down to get absolutely focused for the next 10 minutes. Okay? If I see one no, we are not going to do it. But if you want to get absolutely focused on the topic of options chains and options and understanding how they move the markets, I will drop the secret sauce right now. Okay? I will drop the secret sauce right now. Yes, 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 yes. One. Yes, 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 yes. No. Okay, so someone texted me on Discord and said no. So who is on Discord texting me that's not in the... All right, anyway. Drop it like it's hot. Yes, okay. Give me 1 second while I pull up one thing here. Okay, and unfortunately, guys, I have an unfortunate thing to say. I believe someone's timeout is almost out. Give me 1 second, guys. All right, I'm gonna turn off the music too, just so you guys get extra focused, so you get out of bed. All right. 1 second. I'm trying to find an image. Chains, do you have the flow criteria image I made a while ago? Do you have that anywhere?
Have what? I might have it.
I don't.
The options criteria, that like square thing.
Oh. Wait.
Kuwani, you got it. Oh, I got it. All right. Are you guys actually locked in? Okay. Are you guys actually locked in? Okay, here we go. You ready? So let me open up YouTube again, or my OBS. Okay. I need a gatekeep. All right, W Discord. Extended timeout, lol. I'm not that mean. All right, music off. Where's the music? Boom. All right. All right. Yeah, so Chat Mama in chat right now, she's a member of our Discord. Guys, first of all, I want to say this, okay? Who I'm on call with right now, these guys I've been working with the last few months. They have done exceptionally well. Chat Mama in chat right now, she's been with us for a few years now. She's done exceptionally well, and she has laminated this image right here, Okay, but what I want to say first is, first of all, for all you haters in here, if there are any, hopefully there's none, but if you are not, and you're just curious about me, I am not self-taught. Okay, so don't think I'm some random ass 20-year-old running around going, guys, I know how to trade options. No, I know how to trade options. Okay, I was taught by a very professional group of people. Okay, and those people I convinced to help me run the Discord. People like Chat Mama in here, they've been a part of it for years now. It's a private community. It's more exclusive. We try to just have working professionals in there, people who actually care about this stuff. But you can ask about that later. Anyway, so this criteria, this stuff here, is not some unresearched hula boo boo. Kuwani, what's a word for something that's useless? Brain rot. What else? What is there? Got a word like alpha, opposite of sigma, something.
Beta.
Okay, okay, there you go. So this is not stuff that is just random, that I made up, that is something that's just theory. No, this is fact. Okay? So let me understand, let me walk you guys through this real quick. Options, okay? Each option order has an obligation to potentially buy or sell, depending on if it's a put or call. I mean, we're just going to go with naked puts and calls right now. They have an obligation to buy or sell 100 shares, okay? Does everyone understand that? Type in chat if you understand that. Type in chat if you understand that a call, right? You have the right to buy, and a put, you have the right to sell 100 shares. The obligation, okay? It is not it's not you automatically do it. It's not this is guaranteed. It's just the obligation, okay? Or whatever, right, whatever you want to say. Okay, does everyone understand that that is something that's tied to options? Type in chat yes or no. Also, okay. Yes, understood. Okay. So, if there is a consequence to options, per se, not negative, just a consequence, an outcome to options. So if I'm a market maker and I sell someone an option, because remember, now when I say the term market maker, for all you guys in chat right here, for all you guys right, no obligation, that's what I meant. So for all you guys in chat that believe that the markets are run by the shady group of people in dark suits that make decisions about everything, no, that's not how that works. Market makers, whose job is to provide liquidity. Their job is to not maliciously clap your calls. Their job is to not take your grandma's retirement account and liquidate it. Their job is to not take your own money and go, ha, I'm going to hunt his stop loss. They're not trying to do that. What their goal is to do is to balance the markets. The more balanced the markets are for them, the more money they make. They make money off providing liquidity. What does that mean? It means that they are making money off selling as much options and balancing and making money off the spreads as possible. Okay? That's their job, is to balance things, keep it at equilibrium. Okay? There is no market if they are malicious and they purposely target and do these evil things people paint them to be. Okay? So, if I'm a market maker and I have all these options with the right to buy these shares, well, damn it, I'm going to have to sell them shares if their call is exercised, right? So I have to do something with the equity market, okay? And this is where you tie in the strings between the options market and the equity market, okay? Does everyone understand this so far? Is anyone absolutely confused? Is everyone absolutely not confused? Type in chat. I can attest to using the knowledge I've learned from Raider and his mentors. Joined next day after he called out shorting Uber. First sign of weakness. Let's go, Witchell. Okay, does everyone understand that? Yes, I'm good. Yes. Okay. Knowledge I've learned. Sorry, you're going to hear my thing for a minute. Okay. Not confused. Understood. Followed. Okay. So now we have bridged the gap that there is now a correlation. There's now a bridge between the equity market and the derivative market. Okay. The options market. So the market makers, options are a lot more risky than shares are, per se. Okay, so when certain orders come in and they have bigger obligations, they have to not only hedge these orders, they have to balance these orders with the equity market, but they also have to kind of do some stuff with the options, right? Because they're not going to go, okay, well, I'm going to go to a stock with, I'm going to go try to do all this on a stock and there's a huge imbalance. Anyway, I'm getting off track. Let me get back on track here. I need to explain this in absolute dummy terms. Now, if certain orders have impacts, now the discussion becomes, well, what orders? What types of orders? On what stocks do these orders have impacts? Okay. Let's start with a broad market perspective first. Okay. Puts and calls in the market. If there's too many puts in a call or in a market, let's say there's too many puts within expectations, too many puts, right? What would the market maker be forced to do? Let's see how good you guys are. Okay. If there's too many puts in the market, what would a market maker be forced to do? Okay. Just from a real basic standpoint. We're not going any deeper than surface right now. What do you guys think? Type in chat. If there's too many puts in a market, too many people that have the right to sell, right? What would the market maker have to do to prepare? What would he go, damn, man, like, I got to prepare for this. What's he going to do? Buy equity. Now, chat mama, you're not wrong. You're getting into hedging with derivatives. We're talking specifically just between options and equity. Okay, so we're not talking about gamma hedging or anything like that. We're talking about just shares. So if there's too many puts, they'd have to buy it up. Okay. Now, there's also this obligation of balancing the markets, right? They're not just going to buy it up. And of course, if a market's downtrending during bear markets, there's of course always going to be more puts than calls. That's just natural. But when there's an imbalance, something that's unmanageable, something that's not something that they want to really deal with, they have to balance it. So what's an example of this, right? Or what's the most basic example of this idea of options and how they influence the markets? Well, we can just pull up an options chain. So I'm going to actually go to 2 different websites here, and I'm going to show you guys. Okay, I'm about to show you guys here. Okay, so let me show you this real quick. All right, so in SPY, this chart right here, who knows what this chart is? Let's see how good you guys are. Who knows what this is called? Who knows what these 2 things right here on screen right now are called? Okay, who knows what these 2 things on screen right now are called? What are these called right here? Kuwani, what are these called right here? Let's see. You're the big man in the room. What are these called?
The options chain. Come on.
Okay. Who else in here? Type it in chat. Let's see if Kuwani's right. Type it in chat. What is this? Oh, my bad. I'm not sharing the right part of the screen. Okay, you guys can see this now. So what is this right here? Options chains. Options chains. Okay, so you guys know what this is. This is what it looks like on your brokerage when you go to buy puts and calls. Okay, this gives valuable information as to where the market's going to move. Okay, so looking at this right here from a basic standpoint, do you guys see an imbalance? Okay, let's just see that. Do you guys see an imbalance? Now ignore what ticker this is on, but just, do you guys see an imbalance? Yes or no? So let's see right here. Let's see how good your market making skills are. All right. So let's say you guys right here, this is in the money. Okay. So this is ITM, just so you guys don't get confused. They show it a little weird on here. This is ITM. Okay. So this is in the money and this is out of the money. Okay. Do you guys see an imbalance? Yes or no? So this is puts and this is calls. All right. Do you guys see an imbalance? Too fuzzy. Is it too fuzzy? If I zoom in. Is this good? Is this better? So many calls. Calls and balance, heavier than puts. Yes, yes. All right, so you guys are starting to get it. So this is the basic idea, okay? So this is where all this stuff kind of comes together. Is that, well, Raider. So not only can we draw now this is the power of options as well. Is that you can go on charts, and you can go and you can spot call and put walls. So for example, let me show you this. I promise I'm not plugging the Raider report, but I kind of am. So I archive all my SPY charts on here, and I update them every week. So let's go to the week of May 19th, for example. Or let's go back and do May 26th, where I put a call wall. Let's see. I think I had a call wall somewhere on here. I normally put them in text chat, but sometimes I don't. Let's see here. Okay, right here. Okay. So this was the week of March 24th, all right? And you can see right here on my chart, I had a call wall at 524, all right? So I have this level on my chart, and without options, you would never know the strength of this level, because the more open interest on that level, the stronger it is. But also, to real basic terms, there's some exceptions to that. But you would never know the strength of it, but you would never know it's even there if you didn't look at the options chain. Okay? So this is, again, why options are the most powerful asset class in the world, because of the information they give you. So you have 524 right here. Okay? Now, if you go to that week of March 24th, it's right here. Okay? You came up to that level, and you absolutely shit the bed off that call wall. Okay? So that area was the imbalance for the week that caused a reaction of selling off of it. Because, you know, other people, when you guys look this up online, this is what you're going to hear, okay? You're going to hear that to hedge a call, you buy equity. But that's not true when there's a lot of calls on one level, because the market maker would rather drop it and then buy the equity at a cheaper price and then not care where the stock goes. So it's actually incentivized to correct that imbalance. And again, going back to the idea of imbalance. Okay, so are we all clear on that so far? I know that had nothing to do with option flow, but I'm kind of explaining to you sort of that principle, that how the market moves based off of the options. Does everyone understand this? That and I'm sorry if I didn't explain this clearer, but the higher the open interest on a level, the more strong that level is. Now, it has to be within expectations of that time frame. So if you're trying to look at call walls all the way up here, it's 570 for 719, not going to happen. It's irrelevant, doesn't matter. We want to stick within expectations. Finding the expectations is a whole different topic. It's for another night. But where do you not look for put and call walls? I call these put and call walls. Again, you're looking at the open interest. Where do you not look for these? Typically, we don't care about where they are in Tesla, Nvidia, any stock that has a absurd amount of volume outside of SPY. The call walls and put walls don't really matter. Okay. But stocks like Snow, stocks like CAT, stocks like BA, stocks like XLU, stocks that aren't so common, stocks like BA where you can pull up an options chain and you can look and you can go, okay, this looks like something that's not too crazy, right? This isn't crazy at all. And you can see here's our mans on the options chain right here. There's a huge, right now, at least on paper, a huge call and balance on BA. Now, that doesn't necessarily correlate well with its direction right now, but that option flow can help guide us, the one that we have, okay? So is everyone clear? Let me catch up on chat. Volume, open interest, not volume. You do, if a strike has a lot of volume, and so here, let me show you why you don't look at Tesla, okay? So let's ask Mr. Kuwani or Chains, why do we not look at Tesla for call and put walls?
Too much noise. You can't really find
Okay.
any information on those.
And define
Right.
noise. Define noise. What is noise?
too much positions, too much volume,
Yeah. So
too big of a company.
do you see the strikes here? This 257 5 strike has 43,000 volume, but only 5,000 open interest. So if I'm a market maker, I'm not going to care about balancing it off this open interest or these orders because that come in. This is why option flow is not important on stocks like this, because if no one's holding, then I don't have really an obligation to do anything about it. Right? If everyone's day trading, I'm not going to have to balance it. It's only the people who stay with the stock, place these big positions, and stick with it till the end are the market makers going to be concerned with that. Okay? Is everyone clear on that? So we're not looking at stocks like Tesla for this, and that goes with the option flow, which I'm going to transition into next, is that we don't look at option flow on certain things either. Okay? Is everyone good? Are we up to speed right now? Are we up to speed right now? Let's see what we got here. Are we up to speed? Raider, you're attractive. Raider, you're handsome. Raider, how tall are you? Are you 6 foot? Handsome.
I'm not seeing those.
Oh, oh. My bad, guys. I thought I was reading the wrong chat. My bad. You guys good? I swear I saw those chats, dude. Kuwani, you sure you didn't delete them?
She like didn't see anything at all, like very clearly actually.
Wrong chat, bro. All right, thanks. All right. So I forgot to mention one thing as well. XB, you are absolutely right. Thanks for reminding me. The expiration also matters, guys. In general, the closer the expiration date is, the more influential those levels are. Rule of thumb, if you ever want to draw call and put walls, just use the next monthly. So right now I would be using 7/19 to draw my call walls. Okay? All right. Bro, ain't no one saying those. Kwani, I swear I was saying those though, right? I mean, I saw some
Might have
chat.
been like change this girl.
Do you guys think? Do you think the mixed songs guy was deleting those, or maybe I gave him moderator? I'm sorry if you're still in here. Mixed songs, no hate to you, bro, but some people would just be outrageous on the internet. All right, so we're all clear. All right. All right. If no one is holding, market makers can't let people balance each other out. Is only the people that hold they worry about? Yes. Makes sense to imbalance is open interest for calls versus put. Dominic, I mean, I could go all night about this, but not necessarily. So you'll see a stat on the, so one of the most common indicators in the market is the PC, the put to call ratio, because the idea is that market wide, if there's a lot of puts, then that typically correlates to a market pump. So right here, you had a massive spike on Wednesday, April 17th, okay? So if we go to the markets on April 17th, you can see that that was very close to the bottom. Do you see that? So this principle is not made up. I didn't make this up, but it's not just the number of puts to calls, but it's also where they're placed. Because if a put or call is in the money versus out of the money, the market maker is going to be more concerned about the in the money one than he is going to be about the out of the money one. Does that make sense? Because he doesn't have to pay someone out. He doesn't have to get the shares if it's still out of the money. But when an out of the money order comes, and this is where we're going to talk about the hedge orders, maybe not tonight, but that hedge order like on BA, it was out of the money. There's an incentive to actually balance it because they don't want it to be in the money. So they just do it now. They just push it against them now. My girl keeps texting Raider. That's actually pretty common, to be honest. Wait. Why the 19th, not end of week or end of month? XBS, because majority of money is actually on the monthly expirations. So you want to put your walls. Now, this doesn't go for option flow. Don't confuse the two. This is just for finding the put walls and call walls. but majority of money on expirations is for the monthlies. But that doesn't mean that the response is going to be any different. The market makers are going to move it based off where majority of money is. Does that make sense? So we're not doing tomorrow's expiration for SPY because that's not where majority of the money is. The majority of the money is they're balancing it into 719. Okay. Now, do you guys want to see a Raider? Do you guys want to see this applied in real life? Do you guys want to see an example? Yes or no? Yes or no? Yes or no? The saintly MMs that don't want to. Hey, unless if I'm aware of some devilish ones. You know, there's probably some option trading freaks out there that like to be whipped by the market makers. Pause. Do you guys want to see an example? Yes, yes, yes. All right. I'll show you an example right now. Okay. All right, can you guys hear this, Kuwani? Can you hear this? The weakening side while the you can hear it? Okay. All right, here you guys go, okay? Now, this is the importance of options. I can't stress this enough, guys. You ready? Hold on. All right. So, we are going to watch this for a few minutes, just 1 or 2 minutes, okay? And what I want you guys to pay attention to is how and why. Now, in this goes, the only reason I'm showing you this is because I want to show to XBS why the monthly matters the most. Okay. So right here, this is exactly what we're going to watch for a second. Okay. Now, pay attention to what I say and we will reconvene after. Okay. So listen to this. Be more profitable. And be more profitable starts with looking at the SPY chart to see where we are in the markets. Now, I said this Friday is one of the most important dates for the stock market. I'm not joking. That is quad witching, where hundreds of $billions in options and other derivatives like futures expire. What does this mean to us? Well, market makers are going to do their absolute hardest to try to balance the markets into this date. And over the last few weeks, you guys know we've been discussing the different phases that the market has gone through. 30 days before marks the shakeout phase. You look at the chart, we've already gotten that. We had a big reversal down. It was all a fake out. It was all planned. And 14 days before the quad witching, you see what we call max pain. This is another pivot. You see a shift in velocity either up or down. And I'll throw this up on screen again. The most common structures are typically this during this time frame. You see a pump and then you get a dump that closes right in the middle, or vice versa with a dump and a pump right in the middle. So what's happening right now? Well, the SPY is ripping up towards the expected range. This is a lot of momentum, especially with it only being Tuesday coming into Wednesday. Already coming up to the expected range shows there's a lot of strength in the market. But is this going to last? While last year's June quad witching date ended up in a huge pump to the upside with no stopping, I don't think so. And a lot of my tools and data actually point to something else. Now, the first tool that's going to give us a better idea of what we need to trade is actually the RRG charts here. If you guys have been a follower of mine for a while, you should know what this is. But right here, this shows the money rotations in the market. Where's money going into and where is it going out of? And I have the sectors thrown up on this chart here. What you'll notice is that technology XLK is on the weakening side, while the defensives and value sectors such as staples, energy, all these other names are coming in and improving from lagging. This tells us that money is rotating into defensives and value. What do we know? Why is that important? Because when money goes into defensives and value and out of tech, it's very often that you see a drop within 2 to 3 days of that happening. And given that this aligns with the quad witching pin move that we typically see, where you get a run up into it during the 2-week time frame before that actual quad witching date, it makes sense that we could actually see a drop here. Now, the image I showed was actually from Friday. If we look at today's, you can see while... All right, so that's enough watching that. But what I wanted to do also, mods, 4-year community service ban on 1320 Wolf for saying I look kind of pasty. So what I wanted to show you, XBS, is that I'm talking about quad witching. And I was talking about a fake out coming. And I talked about a scripted drop 2 to 3 days before the expiration. If you look at when this was into the 21st, which was June 21st. Okay? And if you look, this was right when I was making the video. Was right when we were at 5:48. So we were right here, okay? And I said right into 2 to 3 days before quad witching, you would see a drop. The reason, and if you watched my previous videos, you would have saw my entire thesis was spot on. And I was bullish on this drop because there's always a fake out 2 weeks or 30, at least within that 30-day period before, and then 2 weeks before you get that run up into eventually 2 to 3 days before hitting the sell off into the major expiration. But what I wanted to say to this was that, oh God, I'm sorry. I just noticed, sorry, my bad. But just quickly right here, this is where we were talking about, right here. And you can see 2 to 3 days before that quad witching date, which was right here, we saw a scripted drop into it. So the reason you always want to do it for monthly is because they will move it into the monthly date more importantly than worrying about day-to-day stuff. So if you go watch these videos, if you guys don't, if you want to touch up on this topic, go watch this one, go watch this one, go watch this one, and this one. Okay, these last 3 videos were all about quad witching, and they were goated. Okay, so you can go watch that concept play out in real time of how predictive it is into that monthly expiration. Okay, moving on. So are we all good? Do you guys want to move on to the option flow segment? If you haven't already dropped a like on the stream, please do. Also, shameless plug, but if you guys actually do want to sign up for the raid report, now it's absolutely free to sign up. If you guys sign up with the raid report for free, what you will get is my spy chart. Okay, so you can access my spy chart, and I update this every night with the chart. So if you guys want to get better at charting, or you want to compare your chart to mine, my chart, I can tell you, is going to be always 100% right. But if you want to see my chart, it's always on there. The call walls, everything like that. So if you want to verify that, you can go sign up for the raid report. It's free. Just log in. Now, for you mofos that are not signed up for the raid report already, it's just $50 a month for the pro plan. And what you get is actually all the indices charts. So all the charts get updated every day. And then you also get the weekly report, monthly report, and the seasonal expectations, which we make the data, stuff like that. So this is day-to-day seasonals, and then you also get the seasonal tool. So this is like $50 a month or $120 a month elsewhere, but again, we built this into it, so you can use this. Okay? All right, shameless plug over. Are you guys all good? Type yes in chat if you understand where we're at right now. Yes, majority of money is where they're going to pin these things, okay? So I just wanted you to get that. So do not look at like call walls and put walls for the 12th, etc. Okay? Are we all good? Are we good? We finna gap down at open tomorrow, trust. I would not be surprised. I mean, that's kind of what we're trading. Yes, yes. Okay. All right. So now we circle back around. Now that you guys have now that you guys are warmed up. Pause. Maybe I shouldn't say warmed up. Now that you guys are loose. Probably not a good word either. Now that you guys are just okay, just whatever it is, okay? I know you're delayed by like 10 seconds. My stream is delayed. I gotta fix that. But as far as this, I think I can stream with no delay. Let me see real quick. You actually reminded me, since this is like my first time streaming, let me see if I can change the delay real quick. Replay buffer. offer. I don't know. I'll mess with it later. We won't waste time now. But as far as this goes, here is what I consider for the option flow. Now, you guys will notice there's some correlation from the topics we talked about before. Now, Kuwani, let's have you intervene, and since I've been talking all night, yapping all night, let's have you do some talking. So, why do you think let's start with the ticker first. So this is out of 10, guys. Why do you think that the ticker matters that we trade, Kuwani? That we look for on the option flow? And again, when I'm referring to the option flow, I'm meaning looking at orders. Why does this right here?
Well,
the ticker.
like we talked about earlier, big tickers don't really matter. We want the unusual names, right? Right?
Yes. Now, why would big tickers not really matter? Like, when we say big tickers, what do you mean?
Like large caps or whatever, like Tesla, Microsoft, stuff like that.
Okay. This is exactly right. Now, in majority of cases, and there are always exceptions, guys, but majority of cases, we don't want to look at tickers like Apple. And I'll tell you why. If we're trying to trade, when we do option flow, there are trades that we follow the same direction as them. We're not always betting against them, but there are trades also that we bet against. The trades that we bet against, we're betting that the market maker makes a move. The trades that we bet in the direction with, the same direction they got, we're betting with a trader, but we're waiting for the market makers to balance it out first. Okay? That we believe these trades will work out. Now, the reason that matters is because if we're in a bull market, who are we going to trust the more? Who are we going to trust more to make money? The guy who buys snow calls, SNOW, or the guy who buys Apple calls during a bull market? Definitely the guy who buys snow calls, because that is inherently more aggressive. It's more risk. And you guys will see that the option flow we look for, it's aggressive. We're trying to find aggression. Okay? So we're not looking at Tesla. We're not looking at SPY. We're not looking really at QQQ. We're not looking at the big boys, the NVIDIAs, the highly spammed. If you take the top 5 volume stocks, mark it off your list. We're not looking at the option flow for that. Okay? Now, again, there's always exceptions. But the reason Rick says not that we are edged. If we ever get 100+ viewers in here, I'm getting canceled. There's going to be clips of me on TikTok. Trader edges on stream, or some corny clip farmer like that. Okay, anyway, back to the topic. So, do you guys understand, yes or no, why we would consider what tickers to look at? Why that matters, ultimately? Because I'll tell you this. Everyone on Twitter, if I went and pulled up my Twitter right now, aside from the garbage that's on Twitter, you would see these flow traders. And I'm telling you this, guys, right now, I'm the only person on Twitter who knows how to trade flow. I'm the only dude on social media who knows how to trade flow. And I'll tell you why. Because the guys that taught me how to trade flow, my mentors, Zach, he may have been involved in the business at one point. We'll just leave it at that. But this is how it actually works, okay? I say that with confidence. So do we understand why that is? I don't know what I don't know how to stop the delay. I don't know if that's on my end or how to stop stream delay OBS. All right, we're just gonna
tab. Check out the stream delay box, and here you.
All right, I literally watched 2 seconds of it, and now I know how to fix it. 1 second. Wait, it says I don't even have a stream delay. Interesting. Okay, 1 second, guys.
The trick to lag less on OBS Studio is by right-clicking the software every time before opening and run as.
What am I?
you can change all the settings that are available for stream delay in OBS. If you want to enable a stream delay, you click on enable, check this box. If you want to disable it, disable it. Change the duration of how long of a delay you want. If you don't want any delay at all,
All right, sorry you guys had to watch that. Wait.
obviously, as I did say, you want to uncheck this box. Preserve cutoff point when recording. This should
All right, that's just a whole bunch of garbage. All right. So, I guess I don't know how to fix it. But anyway, so let me get back to the topic here. So, does everyone understand? Yes, yes, yes. Better risk to reward. The value you give is so unproportional to the views you get. Man, it's crazy. Gotta gatekeep though, not gonna lie. Listen, XBS, I absolutely agree. I suck at media. I'll always tell people this. I'm a trader first, and I do this media for a hobby. So, it's the other way around for 90% of people. And I just don't think people actually want to trade, because I think majority of people out there, they want to do well in trading, but they don't want to put in the work. So they'd rather just live through someone else, live through the lifestyle, live through the flexing. They'd rather get shitted on by their favorite influencer. They'd rather be on camera. They'd rather have their favorite influencer tell them how worthless they are and then flex the Lambo than actually learn trading, because that's just, they want to be around rich guys, but they don't actually want to yeah, anyway. So, would have happened with Raider. Yeah, so anyway. All right, Kuwani, why does the premium spent matter? This is going to be a tougher one for people to understand.
Because it has to be balanced out, right? So the bigger the order, more aggressive. We don't want to pay that guy out.
Now, why did we specifically make this range right here?
Make what? Oh, yeah. So anything under 200K is kind of like small in the eyes of the market maker or whatever.
Mm-hmm.
So he doesn't really need to balance it out. He doesn't have to get freaky
Okay.
with the order.
Okay, pause on that, Kuwani. Let's dial that back. Listen to this, guys. Now, this isn't, again, there's always exceptions, but in general, why do I only scan for stocks that are above 100K? Because if the order is not big enough, there's not going to be a tradable reaction or a tradable urgency from the market makers to react to it. But if we're going to follow the trade as well, if it's too small, that means that it's not enough risk to follow. Okay, now let me say this one thing, and this is going to blow your guys' mind, all right? The more risk a trader takes, the higher win rate. Now, I'm not talking about YOLO in account, but I'm talking about in the market. The more risk that trader takes, that order takes, when we're speaking specifically about the option flow, if he places that order, if that order comes into the riskiest location with the riskiest order style, he will be rewarded most often. That's pretty hard to understand. The less risk someone takes, the less likely they are to win. And this goes back to that conversation of who do we trust more? The guy buying Apple? That's less risky than a guy buying Snow. Objectively. What's the point system? There's just to stress the importance of it. So when we scan flow, these are the major factors. So we consider expiration obviously more than the ticker. In relative, it matters, but this is like really the pivotal two right here. Is like, you know, we can have calls on Snow, but if these aren't the correct ones, then the trade is out. Okay. All right. So Kuwani, let's move on to so again, going back to this topic, 200K to 2 million. This is the researched amount that I've found, my mentors and I found to be the sweet spot. If the order is too big, it puts a target on your back and it's less likely to work out. If the order is too small, and when I say less to work out, but it puts a target on your back, not only for the markets to screw you, like you and I both obviously know we can't go and place $2 billion worth of calls on Snow. That's not possible. So that is the amount we found to be the target on your back stock. Now, could you go, well, couldn't we bet against them? No, because when you get too big, a lot of random shit happens. A lot of crazy shit happens, and it gets unpredictable. Hence why after stock moves a huge amount, you get crazy ass price action. It's the same principle. Okay, is everyone clear on the premium amount? Type yes in chat. Type Raider is handsome if you're confused. All right. Chains, are you still live, my boy?
Chains?
Yeah,
James?
but I've been watching you eat, and now I'm like looking at Uber Eats, looking at McDonald's. Right now. Yeah, no.
Guys, in case you guys don't know, he's my Discord mod. He's like 350. How much are you? 350, 340?
Well, I've been on a cut recently, so I'm at 332 right now.
Nice. Okay. So I'm trolling, guys. We do not. He is not overweight.
Is there like something wrong with him being overweight?
200K to 2 million. Now, again, if you guys know me, there's always going to be exceptions. Do we type ugly if we understand? So, moderators, please ban horror stories. 4 weeks community service, 200 push-ups, 300 sit-ups. Mandatory, done by next week. Yep, big money sometimes just becomes whales. They get eaten by the sharks, market makers. Yes. So, for all you guys that are on Twitter going, look, my favorite optionflow.com guy posted big calls. Now, let me show you guys. Well, I'm not going to hate on other people, but black box stocks themselves, please don't ban me. They don't even know themselves. They provide the data to me, and they don't even know how to read option flow. They're posting calls, and which we'll talk about it. Okay, Chains. We'll talk about it here in a second. Chains, why is expiration dates important? Why would that be important when we're trying to look for an ideal order?
Because sometimes if the expiration's like a month out and the order's too small, then it's not worth looking at. And
okay, so which is when we're trying to look for the benefit of options is what? Timing or direction? The major benefit of understanding this stuff. Which would you think it helps more with, timing or direction?
I mean both, but probably timing.
Yes. So, in order to get an idea of the best, if we're trying to capture a move from the market maker, the direction is implied. It's already there, based off structure, based off the order itself. But what we're trying to do ultimately with option flow, guys, is time the markets better. So since option flow has an expiration date, the more aggressive orders that we want to follow or gain information from or get some sort of idea from is going to be within shorter time frames. If you see a guy right now post on Twitter, hey, look at these November calls, unfollow him right now. There is no value in looking at November calls, especially all the clowns that were like, hey, Nancy Pelosi's up 700%. She bought 500 strikes in the money for like 20 months out, something crazy like that. So none of that matters. What matters is that it's aggressive. It's close expiration. It makes the move predictable. Because I'll tell you what, if a contract is too far out, the market maker can lounge around. He can make the move in certain little increments, but if it comes in, boom, real close, he's got to do it all at once. He's got to do it now. He's got to do it very soon. So that's, if we're trying to time markets, we want a shorter time window. Does everyone understand that? So when it comes to month plus trades, we don't really follow those all that much. Weeklies, these are ideal. These are the aggressive ones. So right now, when I'm looking at option flow right now, I'm not really looking at 719 as much. What I'm looking at is 712 and 726. Because if someone's placing a 719 expiration, inherently they are taking less risk. We go back to that conversation. They're taking less risk if it's on the monthly because that's a passive trade. That's where everyone else is placing trades. Okay? Now there are exceptions, but in majority of cases I'm looking at 712 and 720 or 726, whatever. If you go back to my last Ritter report, this was look at the BAC trade. So this was 7.5 Moderna. This was 7.5, 7.12. So these are aggressive expiration dates. Look at CVS 7.5, So these are not the monthlies, and I don't typically do those all that much. Okay. All right. Does everyone understand? Type yes in chat. Just expose them. I'm trying to learn from non-examples. It's not hate. It's constructive criticism. So basically the orders with abnormal aggression, basically the ones with all these points of confluence. Also, you use unusual whales still? So unusual whales is pretty garbage. I'm not gonna lie, man. Their filters are horrible. The 90% of flow, 99% of flow is useless, and they don't have the filters to get rid of the useless shit. Is it the 19th, the monthly on all options chains? Dominic, it is the 3rd Friday of every month. If you want a quick trick to seeing the monthlies, look at ticker XLB or ticker XLRE, write it down. Just go to their chain. They only offer monthly expirations. So if you go to ticker like XLB, go to their options chain, it will show you all the monthly expirations for the future. Okay, but it's always going to be the 3rd Friday of every single month. All right. All right, so you guys understand that. Now, strike price. Kuwani, this is back to you.
No, he's peeing.
Oh, he's peeing? All right,
Yeah.
Chains. You're locked in then. Why is the strike price important?
I mean, it depends. Just like, so it depends like what kind of order they're trying to do. So if it's like aggressive or not so aggressive,
So if I want to take more risk, what do I do? Which one do I
you
get?
go more in the money
Out of the money.
or at the money.
Yeah,
at the
you're
money.
right. Now I know what you meant. So out of the money, and this goes back to out of the money. Most of the trades you guys will see me post are out of the money or at the money. In the money trades have their own little section, but you can't go too in the money. I see, again, this goes back to the Nancy Pelosi situation. If you're placing deep in the money calls, so if you're placing or deep in the money stocks or whatever in the general. So let's just back this up and let's go like this. Okay? If you see something like this, this is a $50 in the money put on Google. This is not aggression because what they're doing is they're getting closer. The benefit of options is leverage. So when they go deeper in the money, they're getting closer and closer to a delta that is the same as shares. So it's a less aggressive trade. Okay? So, and especially when it's deep in the money like this, it's not something to follow. There's no conviction behind it. It's outside of expectations because Google is not going to 240 by 620. So therefore, well, this was next year. Maybe, it might, whatever. But pretend like this was shorter expiration. I didn't realize that was for next year. But it's still outside of expectations. Okay, now I don't think it actually is, but just ignore that, okay? But 50 strikes out of the money. All right, does everyone understand that? Okay, now I'll finish the last two, or the last one. Sweep versus block. I only look for sweep orders, and I'll tell you why. When we look for aggression, there's two types of ways people can place orders. A sweep order or a block order. A block order is not necessarily institutional, most of the time is, and it doesn't mean that they know more. But a block order means that it's a negotiated price, which means that they kind of nickel and dimed for their contracts. They bargained for it. They wanted it at a cheaper price. And if you're aggressive and you had conviction behind the trade, or at least you thought something was going to happen, you wouldn't get a block order, because why would you bring a coupon to a grocery store if you were a millionaire, right? So that's kind of that. Sweeps are much more aggressive. They're coming in. They're saying, hey, I don't care what price I get. I just want it. I want it now. Give it to me. I'm going to overpay. Okay? Yeah. Wolf, gimme now. That's what they want, all right? Gimme. Wait, I think I have. Can you guys hear the soundboard effects when I play them?
All right.
Oh, hell no, man. What the fuck?
Did you pray today?
Oh, hell no, man. What the fuck?
I don't know if they could hear that, but anyway. How far out of the money is too far? Outside of expectations, as long as within expectations. So, for example, do you guys know how to find expected range? Well, that's another night. That's another night. I can't give it all in one night. Come on now.
No, just show it. Just show it.
You want me to
You
show
can
it?
find it in the change report.
Oh, you can find it in the chains report. So, guys, expected ranges are these levels right here. As long as it's within the expected ranges, these gray lines right here, it's considered fine. Okay, now that's out of the money. You don't want in the money all the way down here, but that's that. Okay, you can find it on your brokerage or options AI, depending on what you're doing. So what you can do is you can go options AI, SPY expected range. Type in this. Now I do it on my brokerage, but you can type in that. And then once you type in that, you go here, and then this will come up. And then you go to that expiration. So let's go to July 19th, and it will show you the expected range for July 19th, which is 562.45 to the top and 549 to the bottom. I use 80% rule. Nice. I use bar chart W. Yeah, so bar chart, I have them as well. So if you go to bar chart, you guys can go to type in any stock up here. So you can go to SPY, and then you can go to, I pay for literally everything. Every service you guys can think of, I pay for. You can go to option, it's somewhere down here. I forget. I haven't used this in forever. Where is it? Expected move. There we go. So it's right here, and then it will give you your upper and lower price for that expiration. Nah. You use trading volatility? Yeah, and on trading volatility, I actually don't know how you can do it on trading volatility. But anyway. So, all right. So, if you guys want my opinion, here's what I would say. If you guys want to learn option flow more in depth, definitely join up the Discord. We have all the resources, PDFs, recordings, etc. But what I would say is that do not buy option flow until you learn from us, because you're going to just sit there and look at their plays, and you're going to be so sad. Now, let me show you this. Okay? So we're going to go to Black Box, we're going to go to flow plays. Now, Kuwani likes to go to Taya's stock plays. He loves those.
I love Teo.
So, I'm going to get so canceled for that. So look at what they're posting, guys. And, you know, I'm going to sit here and say this is criticism. It is. It's absolute criticism. So they're posting on May 6th, guys, buy Tesla calls for 531 on May 6th. Okay, 2.3 million. Now, is this inherently a bad order to fall? Not really. I mean, this meets decent criteria. But the problem is they're not thinking. The power of flow is discretion. It's understanding what that idea is trying to say. So if you go to Tesla, for example, on May 6th, did it go up? Who knows? Probably, I don't know. It probably ran up something. So they got the bottom-ish. They bought it like right here. You would have gotten clapped, and just some random shit happened. Okay? So this is not a whole lot going on here. If you can see, they bought here. It's not a whole lot going on, right? So that's tough. It's because they're buying these. Look at this. 11:15 expiration on May 2nd, Meta. Now, did Meta go up since then? Yeah. But is this something that has a lot of conviction that's worth our time? Is November calls? Not really, because this could dump on earnings, and that's it. GG, right? So these are just weird. These are not. I mean, there's no consistency in this. There's no, and if you guys look at this as well, so they're including, look at this, PDD. This BB right here means that it's a sell order, most likely. So why are you placing a sell order? So he sold the calls, and then there's a $23 million of a buy here. There's something weird going on. These orders aren't even correlated. So this is random stuff going on. This is not conviction. And especially it being Chinese names, the flow doesn't matter as much. Okay, now you can see he bought on April 2nd for LEAP contracts, April 22nd. if we go to PDD, right? If they bought on April 2nd, which was right here, you would probably be up maybe you wouldn't even be up. You might not even be up that much. But you would be up maybe a little. And it's like, who knows where this goes from now? Okay? So what I do is I look for certain orders that have meaning, that are aggressive. Now, do not buy black box stocks until you learn that from us. I'm not even going to show you guys my filters I use on it because I want you guys to keep coming back, and then I'll show you. But I want you guys to stay engaged in this. If I tell you too much tonight, you're never going to want to come back. The hub pause, bro said every service. Ban Wolf, please. Mods, can we ban him? How many mods do I have? 1, 3, 6, 20. Damn, this is a big stream. I have 40 mods active right now. I'm kidding. So it's mainly dependent on the validity of the flow, which is drawn from the points. Okay, so let me show you guys another example, okay? Let me show you another example, just so you guys get nice and loose with this. Pause.
Oh, hell no, man. What the fuck?
Sorry. If you guys are older and you're like, damn, Raider, you're so immature, deal with it. I can be mature when I want to, but I can tell you some people enjoy some humor in this industry. This is the most toxic industry you'll ever see. 35 watching, but 40 mods. Hell yeah. So let's go to May 5th. Now, do you guys want to see my biggest trade of the quarter or what? Kuwani, do you know what my biggest trade of the year is so far?
GLD.
How would you know that?
I saw it on the Chains report actually.
Oh,
and I heard you copied.
You saw it on the Chains report. That's right. Okay, here you guys go. Here's a case study. Do you guys want to do a case study? How about we do a case study? Type yes in chat if you want to do a case study. Well, now I need to go fill my water up. So, Kuwani and Chains, you guys read them this right here, okay? You guys do popcorn reading like it's damn high school again, okay? Popcorn reading, all right?
Okay.
All right, we'll be back.
Hey, Chains, you go first. Man, can you guys just tell them that we read it? I don't want to read it. Yeah, thank you guys. Thank you guys. Yeah, thank you. Don't tell him. I mean, Chains isn't here, so I mean.
Yo, I got those bowls.
What bowls?
I got the barbecue bowls.
Were you on Uber Eats?
Yes.
Oh my god, dude. What if there's like freaky eats where you like order like someone to come to your house and like get freaky?
Yeah, I don't know. That sounds similar to something else.
Bro, someone said he looked pasty in that video. I was like laughing my ass off, dude.
So we're just not reading.
Oh.
We're just
no,
not
we
reading
read it.
So we're just not reading it. So all right. So you didn't read it anyway. So this right here, guys, was my trade on Boeing. Are we locked in? Is everyone back? Yes or no? Type yes if you're locked in. Type locked in if you're locked in. Let's see it.
Freaky in.
All right. Can you guys hear me again?
Good, you good?
Let me see the puppy's face. Okay, here we go. Okay, so with this trade on Boeing right here, look at where this guy, and I'll walk you guys through my thinking, okay? Look at this right here, okay? So this order right here, chains, what do you notice about it? Let's go through the criteria, okay? Go through the criteria, chains. Walk me through it.
Right. Hold on, let me pull it up.
No, you good. Or Kuwani. Just do Kuwani. He's locked in.
Thank you, thank you.
Yep.
Well,
Hold on.
first things first. All right, you know, on that chart, what was first? Ticker, right? BA,
Okay.
not that big. Pretty slept on. Okay. Order size, looking good, looking directional to me, not a hedge. Up.
Sorry. 1 second. All right. I had to get it bigger for them.
Yeah, you're good. And then like the size is quite big, so obviously he's gonna have a target on his back, right?
All right. Yes, right. So it's aggressive expiration. At the time of placing this was like, it was fresh off the press. It's very close expiration. It's a weekly. It's not a monthly. It's out of the money. He bought it at 177.78. That's the price of the stock when he bought it. And then it's out of the money. It's 388K. That's a very sizable amount. It's between 200K, 2 million. And it's a sweep. And it's also, this is where the tricky part comes in. You guys have to understand what a hedge order is. There's a little calculation for that I do. But the hedge order right here makes it so that basically we're betting against this guy. This is actually a bullish trade. Now, what really sold me on this idea, sorry that it keeps moving me randomly, I don't know why, but what really sold me on this idea, let me move this around a little bit so you guys can see it better. What really sold me on this idea is check this out. He bought this put right here, right at the high. Now, if you buy a hedge right before a stock breaks out, is that not the riskiest location on the charts? But we're not trying to follow this guy this time. We're trying to bet against him because it meets criteria for hedge order. So this guy sees it breaking out and he goes, I have a huge position in this right now. I need to hedge it. So he places that hedge right here. It creates a mechanical response for the market makers to buy this up. Now, we can also incorporate technicals and our understanding of market mechanics to also make this idea better. So for example, there was a liquidity grab here and Boeing was pretty beat down already. When you have a liquidity grab, it's a void of liquidity, meaning that it violated range. It happened so fast that there's not enough time for orders to form there. When a market goes into an area where there's no buyers and sellers, it wants to go to where there's no buyers and sellers. That's why you have market crashes, is because there's no one willing to buy, right? So it's going to go down to where there is a buyer, essentially. All right? At least like really fast crashes. Anyway, so that's that. Now, what's also good about this setup was that you had a huge imbalance. Look at this. When we talk about the calls and puts, let's see what chat knows. Chat, let's see how locked in you guys are. Okay? Let's see how locked in you guys are. What do you guys notice about this right here? Now, this is a slightly different perspective than you guys are used to. But green means calls and orange means puts. Okay? So what do you guys notice? If this is the current price, this is out of the money. So let me do this. This is out of the money. So right here, this is going higher. So this is higher. And this is lower. Okay? What do you guys notice? More calls and puts, calls and bounce. Now, this is going to be tricky. Now, this is where it gets real tricky. Guys, if the current stock price is at 177.68 and all the calls are above 180, what does that mean? Are the calls in the money or out of the money? Are the calls in the money or out of the money? If the current stock price is at 177 and all the calls are above 180, is that in the money or out of the money? Out of the money. Okay. So is the imbalance really on the call side? If they're all out of the money, is there really an imbalance? No. The answer is no. Because if all the calls are out of the money, the market maker has not paid any of these calls out. So therefore, it's at least beneficial considering, now again, context matters, considering that at the time, Boeing was in this massive spell of getting absolutely washed. Look at where Boeing was at the time of this trade. You had all this going on. You had this huge dump. None of the calls were in the money. So no one in the call side was getting paid. So just because there's more, and this is why I said earlier, just because there's more calls and puts does not mean there's an imbalance. It matters if it's in the money as well. But when you see this, it tells me that if a market maker wants to balance things, guys, if he wants to balance this, what is the objective? Let's see if you guys can get it. What is the objective of the market maker when you look at this? Is it, if their goal is to balance, what do you think is a fair close for the 621 expiration based off of this? What do you guys think? What is a fair close? Where would the market want to ideally close by that expiration? Push price up. Drive price down away from calls. So Wolf, given the context of BA, there's no imbalance here because all the puts are in the money, which means they're being paid out, and they have been paid out for weeks because of this dump. So this is kind of that. Okay, now. So it's not pushed down. It's actually push it higher, guys. And where to by 621? In my eyes, remember, we're going for balance. So would it be optimal for them to close it over 200 or 210? No, because then you get into the unbalanced territory. Now all the calls are in the money and the puts are out in the money still, but they're outside of expectations. So within expectations, the imbalance is definitely would be on the call side. So I would say somewhere between 190 and whatever this was. Now you can see I talked about this. This creates a chain imbalance and will likely drive markets to want to close between 180 and 190 by 621. Okay? So when we go and look at the chat here, or the chart, you can see my goal was to close between 180 and 190 because if we're achieving balance, that does not mean that we're achieving go reward all the calls. So this was my expected close by June 21st. And you can see June 21st, we actually closed right around 176. So it was very close. But this was where I wanted it to close in between. Now, I wanted to see an initial reaction, though. And you can see, as soon as that guy bought the order, as soon as he did, and this goes back to that idea that Chain said, that option flow helps us time things better. As soon as this guy bought, he single-handedly, guys, this one order caused a reaction in the markets. And he caused this insane buying pressure. This one order. If you would have never seen this order, you would have never been able to time this move. And this is why I feel sorry for people that don't understand the options market. Not just option flow, but understanding chains and why they're so important is because the ultimate difficulty of trading is timing. And if you don't get, like this guy literally bought right there, right? So I guess I should have shown you the price chart to the left, but the 190 was right over there. So he bought right here, and this was the trade of the week, and it had a big pop there. So this was just a case study of it. Once you see that big move to balance it back out, you can see the market makers don't give a fuck. So it could have kept going up. It could have gone down. It didn't really matter. But once you see that move start to slow down, now you know that the gig is up, and that's it. Do you guys get it? I'll admit it. I have much to learn. Hey, don't we all, man? Push to close to 180. So when you look at the grand scheme of things, they thought the balance level, I thought it was between 180 and 190. While my range was absolutely massive, they closed it around here. So they ended up pushing it up, and then they pushed it back down, which is balance. That's ultimately what it is. It's not this idea. And I'm going to be straightforward, guys. I'm gonna ruffle some feathers with this one. Whoever listens to ICT, this guy, I've seen clips on Twitter of like people making fun of him and stuff, but this idea that there's an algorithm that controls the market, and this idea that they're hunting your stop losses, like there's some like tribe in the Africa desert like stalking you in the desert. Like no, okay. Their idea is balance. There's no stop loss hunting. There's no let me go. While that stuff is like liquidity grabs are important, there are applications of those concepts. But what I'm telling you guys is you need to just be more logical, be more reasonable, be more neutral, stay in the middle, be more balanced. Understand that, and this is a core part of my trading that I was taught, is that I always have a bearish and I always have a bullish thesis. Now, I always have a bias in which direction overall I think is going to happen, but you always need to have downside and upside trades. So this idea that there's some algorithm and guys with suits controlling the market and all this BS, and it's just not true. So when you see this kind of stuff, this order, this option flow, understanding, and hopefully tonight I sparked some of your guys' interest. Now, I am going to go. Now, before I go, everyone in chat, look for what actually moves the markets, right? And so what I've shown you guys, which other traders, no other social media trader can show you, is data to back up what they're saying. I will stand on business, and that while I won't show you my P&L and I won't show you my money, and while I won't show you my bank accounts to prove my worth, because that's between my mom and God, I will show you all the data, all the trades, all the ideas. I will show you everything related to trading. I do not flex. We do not have flexing profit channels in our Discord. We do not believe in that. What we believe in is performance. We believe in creating real traders, and I believe in at least backing up my words with what I do. If I got on call with any of these guys, they would not last 20 minutes of a conversation with me. You saw guys like the Mixed Songs. He's coming in here yapping about, and this is no disrespect to him, but he's coming in here and he's yapping about deltas and Greeks. This is clearly someone who just learned what option delta and Greeks were, or has been, something like that. And just now that he thinks he knows that stuff, he's going around and flexing these big terms on people. You don't need those big terms. You don't need to declare your dominance in a room and make fun of others because you think you learn some fancy words that makes you superior. What makes me not superior to others, but what makes me confident in what I do is that I will always be able to back my systems up with trading, with live examples, with archived examples, with posting my examples before. I am the only guy in the industry who has the balls to post his trades a week before he takes them, right? I am the only guy with the cojones, as Kuwani would say, since he's from Hawaii, to post my trades a week before I take them. Because I am so confident in the data. But that is what you guys will learn to do, is that once you learn how the markets actually work, market mechanics, technical, seasonals, rotations, options, and option flow, you will actually be confident in talking about the markets, because that's how they work. Anyway.
Like my gold trade last week.
Yeah, and then there was some comment about physics, man. Come on, man. But listen, Mixed Songs, I have no resentment towards you. You are an example to others. And I encourage you to keep coming back, and we will not make fun of you anymore. From this point forward, if someone makes fun of you in chat, I will tell them not to. And so if you want to come back, Mixed Songs, I open and honestly mean this, I will answer your questions and we can have a discussion about this stuff. Okay? But none of this is to make fun of you, but some of the things that's happening, obviously, we have to talk about. But I will openly and honestly defend you if you are down to learn. Okay. Rizix. Okay. So, you know, mixed songs aside, we need to ban this Rick guy. Rizix, are you serious? Nah, you can't stop me. But I'm serious. Mixed songs, bro. Listen, I have sympathy for. Listen, I've been in media. I've had plenty of people hate on me, and I've hated on others, and I've been through that. I was immature, and not saying that you are, but I was immature, and that I used to hate on people with my media platform. I've changed since then, and I am seriously willing to work with you in these chat rooms if you ask good questions and you actually want to hear my side. We might not agree on everything, but what I'm saying is if you just want to hear and listen, that's absolutely fine, man. So Kuwani, when was the last time you when was the last time you climbed a palm tree? Do you sleep in a palm tree or like a hammock, or what do you do?
Okay. You know, I'm gonna join mixed songs. We're gonna do something to you. We're gonna run that fade with you.
So Kuwani, do you have ops in Hawaii?
Okay.
So what do you guys pull up with? Surfboards or what?
Coconuts.
Do you like throw coconut? Do you load like coconut juice into squirt guns and roll up on them, or what do you do?
Okay. Yeah, that's exactly what we do, actually. Yeah.
All right, guys. Thank you so much for coming. Mixed songs, including you. Thank you for coming. Everyone in here, thank you for coming. I'm his biggest op. Okay. Thank you all for coming tonight. We will. Do you guys want me to stream tomorrow? It'll be what time works best? Do you guys think evening's good? I'm not gonna stream as long tonight. I was just testing stuff out. But we will have another stream probably tomorrow night. What do you guys think? Would you rather have it during market hours or after hours? What do you guys think? How do you measure option flow? Personally, I use the black box stocks, but I'll tell you this, mixed songs, even black box stocks themselves, they do not they do not know what they're doing. Like, they'll post these flow option alerts in here, and I don't know if I think you were here when we were talking about them, but the flow plays were just not good. If you want to pay for this, it's $100 a month. It's a lot for a lot of people. The cheaper way to do this to learn is show up to the streams, watch my videos, but cheaper than that. On the Raider report, I always include all the option flow that are actually important, that I'm taking trades on. So we also have a Discord and stuff like that, but paying $100 a month for this, if you aren't 100% familiar with it, is wasteful, in my opinion, of your money, and I don't want you to do that. At least, fumbling around with it and not getting good direction. But that's that. So I use black box stocks. I think they have, although they're pretty, they have the best filters, and I believe that all the other platforms, although cheaper, they do not have the filters that black box stocks has, and that's so crucial to narrowing down all that BS and getting the good stuff. After hours, thank you, bro, for this. Really appreciate you streaming. Hey, thanks for coming, Rick. Evenings, cool evenings. It seems you guys like evenings, and honestly, with my audience being older, I think evenings works because everyone's working during the day. So I'll keep doing that. Good mods don't want to be. What'd you say, Chase?
If you join Discord, I'll you can bum my black box.
No, don't share that. Don't share that. It's I'm pretty sure it's like they can ban me for that. So it might be illegal. I don't know. But the dark pool stuff doesn't work. No. Dark pool stuff is all garbage. Bro, I'm 18. Ban 123 Wolf. Good mods don't want to be mods. So Wolf, you sound like you want to be a mod. All right, guys. So with that being said, all right, it's push-up time, guys. Everyone, we gotta end this stream with 10 push-ups. Wait, I can't turn around on camera. Someone's gonna clip it. Hold on. Okay, we're gonna stand over here. Okay. We're gonna get down and do 10 push-ups. Everyone, I'm gonna give you 20 seconds to get down. If you're over 300 to 350 pounds, you have to be on your knees to do these push-ups, okay? I do not want weight to be the excuse of why you're not doing them. Just do assisted push-ups, okay? So Chains, get down on all fours like a dog. All right, 10 push-ups. All right, here we go. All right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right. Thank you for coming tonight, guys. I will be here probably tomorrow night for a bit. We'll do some more scanning. Now, tonight was more lesson focused. We're going to try to keep it more scanning for trades. I already have some trades for tomorrow already laid out, so we'll do that. We'll do a case study. We'll do some of that stuff as well on certain trades just to mix in that stuff. All right, guys? Have a great night. Stay healthy. Share the stream. If you got friends, mofos that want to come out, bring them here, and we'll get nice and excited, all right?